Hello and welcome to this very special show, which we are calling Be Bullish. Markets are continuing to hold out very well. The Nifty is about 17% higher than the 2008 peak. Mid-caps and small caps are still below that level. Hence, while you're seeing the Nifty and the Sensex consolidating and maybe going sideways a little bit over the last 2 days, the broader market is seeing a lot of excitement. Rakesh Jhunjhunwala is somebody who's always been known as the biggest bull in the Indian stock market. In this conversation, he tells us that we are about to witness the mother of all bull markets India has ever seen.
What we are now started, and it started last August, when the Nifty was 5,500, is the beginning of what is, I believe, going to be the mother of all bull markets India has seen. I can tell you it's going to last. It's going to get accentuated.
That was Rakesh Jhunjhunwala exceeding himself in terms of his bullishness. He thinks the bull market is here to stay for the next 5, 10, 15 years. Euphoric, really, those comments. Ramdev Agarwal is another market veteran who is known as a stock picker, somebody who looks for value, very, very focused on that, fundamentals. He spoke to me earlier today and he basically identified how to pick stocks, what to bet on, how to create a portfolio which is going to create wealth for our investors over the next couple of years. Listen in.
Markets, they keep, keep throwing off this stocks and bad performers, and they reach to a level where they are left with just the option value. I mean, basically, fraction of the breakup value. Like, say, I'll give example of, say, HPCL. So HPCL had touched about 160 or 170, which was about 5,000 crores kind of valuation for thousands of pumps and 30-40 million barrels of processing capability in terms of refining and your almost 2.5 lakh crore turnover. So because of the government controls and all, the profit machine was destroyed. So it had come to, I think the fair value would be maybe somewhere anywhere between 50,000 to 1 lakh crore, and that had come down to 5,000 crores. So clearly in this kind of optimistic environment, these things, they spring back very, very viciously. I mean, in 3 days, everything goes up by 30-40%. So people are going from one counter to other and finding this, very depressed and compressed springs, and one-time decompressing definitely is happening, and it is happening across good companies, bad companies. All this is a large unpopular category. These companies are very large and very unpopular, so they are coming back to the life. And this has happened, but this has happened in the past also. I mean, anytime when the market recovers, these are signs of market coming back to life. I mean, typically dead companies, they start coming to the life, and that is a sign of maybe laying down of the bull market, big bull market. Typically this happens 2003, if you see 2002-03, the same thing, same kind of things happened, and now it is happening. So it's not a strange phenomenon, except that it is happening with huge ferocity.
Ramdev, is it essentially demand from institutional investors who also, I mean, these stocks basically just went completely off the radar, right? You stopped tracking them, following them, quarterly numbers, annual numbers, what they did, business, etc. Because earnings had dried up, cash flows had dried up. Now, as market comes back, people want ideas. So, when you put these kind of reports out, is it because of the demand from the funds who stopped tracking it? Motilal arguably has got one of the widest coverage as far as equities go, listed equities go. I mean, so you are kind of the go-to research team. So is it that, or you yourself are finding, what you call stocks back down to option value, and these could be good ideas to bet on anyway?
Research definitely will put out judging the mood of the market and what looks to be, what could benefit the clients. I mean, very little on the downs. I mean, the damage should be very little on the downside, and upside potential should be very high. So that's the job of the research, to be topical and relevant at any given point of time. And the mood was building up. Okay, I mean, the result came on Friday, but the mood for last 2-3 months was building up for a price and this kind of phenomena to happen. So clearly the research department saw that, and they started putting out reports on some of these companies which were very large cap, and in the last cycle, say Ashok Leyland is not a fundamentally unknown company. It's the second largest truck maker company, very large in size. They have 15-20%, 25% share of the entire automotive market, truck market. So they are very large, very respected. Just that cycle had the pessimism of the earnings and overall pessimism in the counter and the sector has been so total that it was below the book value and significantly below the breakup value. So I think when you see the economic revival happening, maybe 6 months or 1 year, this thing, you try to build reports saying that downside is nothing and upside could be 5-6 times. That's how you put the report out. You are not aware when exactly the shots will be fired and madness will happen. So what is happening today was not anticipated 3-4 days back, but it was expected that in next 12 months things could kind of give you some significant return. That was the whole thought process while putting the report.
How do you go about identifying these companies? You of course have a team of professionals who anyway have a mental framework, right? A mental database.
Yeah.
Which comes to play. You know these companies, you've tracked them at one point, they went out of favor, but with the changing mood, the changing sentiment, and general revival, you can come back and give these a relook, a serious relook. But what's the general criteria?
So yesterday I was running a screen where we tried to look at market cap to sales. So typically in a reasonably well-run company, you see that like a company like say Nestle or the top-end company. Top-end company will trade at about say 5-6 times to the sales. All the branded consumer companies will trade at about 5-6 times to the sales. So that's one spectrum of popular and very well-run leadership company. Other hand, you get companies at fraction of the sales. Say, as I was saying, classical cases HPCL, BPCL, and IOC. This entire 3 companies, they have sales running into lakhs of crores, and the market cap is say 7. Like HPCL is 7% of the total turnover. BPCL is about 11-12%. IOC is more like 12-13% kind of turnover. So it is 1/10 or almost 1/10 of the turnover is the current valuation because of bad regulation. The profitability of that turnover is almost 0.42% is the profit to sales for a company which buys oil at $100 from Saudi Arabia or some other country, processes it, gives it to the distribution, brings it to the pumps, and at middle of the night it gives you a pure petrol for 70-80 rupees, and they don't make even 1% of the price. Say 80 rupees is the price. They don't even make a rupee on that for the entire effort they do. So that's a very unreasonable. So people are expecting that this change, political change, the leadership change, and the kind of a governance change which is going to come, a lot of these things are going to change. What will change and what will not change, only time will tell. So this optimism which is building up now is little speculative in character. So good, bad, ugly, everything is going up, and some of them will turn out to be right and some of them will get disappointed also.
You said market cap to sales is a screen that you were running. Is that a reliable sort of indicator to gauge when markets are at extremes and a revival is coming? So if a sector is beaten down, it's at one extreme of valuation, right? Extremely low. Would this work? Market cap to sales? Are there other methods one should use as well?
Yeah, there could be. Yeah, Prashant, you can do anyway, because see, there are fundamentally 2 types of companies. One is small growth companies or large cap companies or blue chips, which are kind of can be of any size. So if you leave aside the blue chip for the time being, then you are looking for either very large unpopular companies which are beaten down, whether it is from energy sector or whether it is from infrastructure or some other place, because a lot of things are going to change in next 6 months to a year. So people are saying that, okay, these companies were beaten down in the old regime, and now new dawn is coming of management or changes, regulations, and so the new business environment is coming up. Hopefully some of these companies will revive, and for sure these companies will revive. They cannot die. Economy cannot afford to not have them. So that's why, right now one has to figure out, and see, once you identify that this company is okay, it's 7%. There are 25 companies at 5 to 6% to the sales, but every company is not worth it, because what you need, apart from this thing, the breakup value of the company should be very high. So when you're buying at 4,500 crores, the turnover could be very high, but quite possible the breakup of the company could be not that high, maybe just about 10,000 crores or something. But here is a company which is available at 5,000 crores, but the breakup value could be, I mean, anybody would say that breakup value could be as high as maybe 50,000 crores, because the earnings potentials are very high. On 2 lakh crores, if you give, say, 2% kind of earnings, so the profit could be 4,000 crores. But whether that 2% will ever materialize or not, it's a speculation.
Yeah. Are previous peak valuations and where these stocks traded at one point useful at all, Ramdev, to look at? Also, along with that, take road construction companies as an example and exclude L&T from that. I was thinking whether are these companies where foreign investors would like to come in a big way, or are these companies where these they aren't large entities? Governance could be an issue, a sticky issue. So can these be recipients of large inflows? And the real money has been so far foreign money. Domestic money can come in as well. So valuations and this second thing, being recipients of big long-term stable money.
So that's what one is waiting for. I mean, let the cabinet be formed. Let's see what kind of noises come, what they want to do quickly, and what are their stands on certain issues, different from the UPA 2. And so how I'm believing that whatever was the policy paralysis and wherever things were suffering because of lack of decision making. I think decision making is one thing which Mr. Modi is going to bring on the table. So there will be some of the things which some of the companies which are suffering from lack of decision making. I think that's where we are going to see first action, because in decision making under the current set of laws should be the least you can expect from this government right now. So I would think that the clarity about which companies, which sectors will come once they start talking about what are their plans. I mean, as Mr. Modi says, after 5 years, I want to come back and give my progress report. So what would you like to see in the progress report? Do you want the inflation to be low? Do you want the growth to be 8%? Do you want fiscal deficit to be, say 2%, or current account deficit to be in surplus, forex reserve to be $1 trillion? So, how will you judge his performance 5 years henceforth? And once that thing is clear, that what their goals are one by one, I think the ideas will start crystallizing, which side the force of decision making will come.
I want to ask you, Ramdev, for our viewers, right? Apart from, of course, investing in mutual fund schemes, which I think is a good way to get exposure and not take individual stock risk. But somebody who's keen to invest directly into stocks, Ramdev, what would you say? Which are the areas in your assessment which are likely to do very well, which will create real wealth over the next few years? Not next month, 2 months, next few years. Which are those areas?
So I was also thinking about it, because in my lifetime I have not seen a mandate like this, political mandate like this, and it is being dubbed as the mother of all the bull markets by a lot of people who are friends and whom we respect. So clearly you have to also start thinking where exactly this action is going to happen. I mean, which one is going to be the big one? So I think my sense is that the well-managed companies, if well-managed companies are available at a reasonable price, I think they have a better chance to not only make disproportionate wealth in next 5 years or even beyond that. Because the companies which are broken today, I mean the companies which are out of favor, or the companies which are suffering because of their own deficiencies in terms of their leverage, they took wrong capital decisions, and their balance sheets are leveraged, they did diversifications or acquisitions which are not proper. I think those companies, they'll be handicapped to move forward, and they will end up making some other bad decisions. So those are the companies I would avoid. In fact, I would look at a company which became better in the downturn and will definitely become bigger in the upturn. So the theme has to be, find the companies which have become, because if it is cycle, it is a cycle. Business cycle was there between 2008 and 2014. So the companies which have suffered from the cycle, clearly the sales would have come down from say 1,000 crores to 800 crores or something like that. Profit would have also come down. But have they become better? Have they become much more focused, and they have managed themselves very well? So they are ready to take on to the future, because future opportunities are going to be multiple times in terms of size than what it was in last 5-6 years. So those companies, and I don't think the broken companies which are there today and they are very cheap, they have one-time opportunity to be kind of priced rightly in the market. But as far as making big money is concerned, the compounding machines and scaling up from say X to 10X or 20X, that is possible only by the well-managed companies. And I think right now the mood is to buy very bad companies, in the sense that the companies which are out of favor and have broken business models, they were penny stocks and suddenly they jump by 30-40%. But I think I would focus on the very high quality, reasonably priced. I would not pay some exorbitant price. That's not the way to make ever money out of a stock market. But buy a company which has quality management, which has good business model, and which are ready to take on to the future.